Warning, warning, warning. What's going on, guys? It's Ricky with TechBudget Solutions, and super simple. Today is the FOMC rate decision. So at 2 p.m. Eastern time, or at 1400, the Federal Reserve is going to meet and they're going to decide. They're going to make an announcement. Are we going to be raising, cutting, or pausing interest rates? Let me keep this as simple as I can. According to the most recent Fed rate monitor tool, there is a 3.5% probability that the Federal Reserve is going to cut interest rates. Remember, the market is desperate. The market has been begging Jerome Powell and the head of the Federal Reserve to start cutting interest rates. You even had Trump making up stories that he could fire Powell. Complete BS. No, there's a 96.5% probability that the Federal Reserve is going to pause once again, proving that yes, the market is getting ahead of itself. And because it's getting ahead of itself, again, market's still in the green, slightly in the green. It would not surprise me that markets begin to de-risk, meaning sell off and begin to, people begin to take profits just in preparation for some selling pressure leading up to that FOMC rate decision. Remember, people continue to overlook all this news of, hey, Trump is finally possibly going to start talking to China. Okay, that was announced weeks ago. Still no negotiation. Oh, well, China confirms that now they're going to negotiate. It's like, how many times do we have to talk about negotiating before we actually do it? Yet markets are beginning to recover because of it. Well, guess what? What is true? Not based off of hope. There's hope that China and the US begin to negotiate. Okay, that's why the market's been going up. What is factual? Factual is today we have an FOMC rate decision. What we also understand is that last week we reported a negative GDP report for Q1 of 2025. If we have one more, technically we're going to be entering a recession. And what do you think is going to happen to our inflation rate when tariffs begin to take effect? They get passed down to the consumer, that gets tracked, and inflation begins to go up. Then now we also have either not just more negative GDP, but also inflation going back up. And guess what? The Federal Reserve still isn't cutting interest rates. Again, all things that you need to take into consideration while they try to cloud your thought process with biggest news ever coming in a few days. It's like, how many times do they have to try to intercept what is actually going on? It's impeccable timing. It's so convenient that he made that announcement just a few hours before the Federal Reserve is supposed to announce a rate pause, proving once again that the Federal Reserve is not cutting interest rates. But again, I'll leave it at that. If you want to go long, please put your money where your mouth is. Go long, right? There's no question that if Trump does announce something or sends out another tweet, it could act as a positive catalyst. But you also can't be surprised that if markets do begin to retrace, it makes sense on why they're retracing. They're retracing because, yes, the market is not technically getting better. It's been moving up solely based off of hope. There's nothing that has actually been proven that is showing signs of progress. But the stock market often doesn't need it to, right? Because that's why they call it a leading indicator, a leading market. It often gets ahead of itself. Just a nice heads up for those that are buying at these levels. We're seeing lack of progress. And if we begin to retrace, I just don't want you to be surprised. I'm also invested long-term in a handful of different positions that I bought when the market originally sold off. NVIDIA, Apple, and QQQ. That doesn't mean that I'm going to be buying at these levels thinking that, oh yeah, all the problems that we had before are gone. Well, no, they're still very much present. They're just not technically getting worse. Not yet. But again, the market has overlooked our inflation. It has overlooked the Federal Reserve not cutting interest rates, and it has overlooked that negative GDP report. How long can it continue to overlook it? Again, we'll be sure to keep you guys up to date. The other thing that I want to make sure that you're aware is in today's live trading session, I ended up shorting AMD once again. Yesterday, I made $11,000 shorting AMD. Feel free to watch yesterday's video. I recap my trades every single day. $3,500 is what I made. Fully closed out the trade, and this trade was caught within my live trading session. Opened up short, caught the reversal, and then bought to cover. And again, I do that with shares. I don't do that with options. I do have an open short here on HIMS. I viewed it to be overbought. I'm down $400, about $500 on the day, but I see huge pullback potential, and my average purchase price is right around $50.39. So right around this general range. So I see there to be some pullback potential. Obviously, that's why I'm choosing to take a short. My trade is not your trade. And let me make this very clear. I don't want any of you guys copying me. I'm not like crypto bros. I don't get offended if you don't see eye to eye with me. I don't need you to follow in what it is that I'm doing. Again, My trade is my trade, and I just like sharing it because I like sharing my thought process behind every trade I choose to take. And that's why my LPP team enjoys our live sessions so much, because it's not just doing, but it's explaining the thought process that leads to the good or bad trade, right? And for beginners, that is very much needed. So if you want to learn more about it so you can watch me trade live every single day starting tomorrow, click that second link in the description down below. You can sign up. It's a one-time payment, lifetime access. It also comes with the A to Z video lesson library that's designed for complete beginners. And again, you'll be able to get access to those daily live sessions. Like always, let's make sure that we end the year on a green note, and I'll see you today for that FOMC rate decision.